Welcome all to this course under accounting frauds. We will be discussing the various topics under this course, which will be explained by myself, Mrs. Dauncey, and Mr. Amin. We will be starting the unit with a red flag in accounting. Um, Reporting, under reporting or over reporting earnings, firms lower their revenue through deduction and expansion to fall in a lower tax bracket. Others may over-report earnings to meet earnings projections, stock options performance, bonuses, or meet debts agreements. Second one is difference in operating cash flows and earnings. Observe the difference in the operating cash flows and earnings. A company may book a profit but have a poor cash flows, which indicates it does not have enough money for its operation. Good cash flow are indicative of sustained growth. The money would be locked in inventory or receivables. So, to have a good indication of solvency's cash flow growth should be monitored or more closely. Third one is abnormal growth of inventories compared to sales growth. In some firms, the inventory is higher than the sales growth. It enables the reporting of skimming or bogus sales. In some cash inventories, it's false. The value of inventories in inflate or the false sales may be noted. This is why it is important to flag events where the inventories is more than the sales growth in the given period. Next comes the abnormal comparative sales growth. The sales growth in the firm tend to be organic or neither growth or decline by a few percentage point. Sudden spike or dips in the sales growth need to be examined. For example, the COVID-19 pandemic resulted in no business for several firms. There is a clear reason for no dips. However, when there is no clear reason, it would be a sign of inflating sales in intent to misreport. Next comes the misreporting. Initially or intentionally or negligently committing a financial or accounting errors or omission or the use of the inappropriate accounting policies. Next is a delayed expenses recognition. Another red flag in the delay of expansion recognition, according to the accounting principles, the expansion incurred and revenue earned should be reported in the same period. If the expenses recognition is delayed without the cause, it indicates another attempt to boost the revenue reporting. Managers usually explains this omission as an errors or misstatement during the accounts. The next will be taken over Mr. Amin.
We have seen 6 points under red flags in accounting. The further 3 pointers will be taken over by me, Mr. Amin. So the first point under this we could see is its LIFO liquidation. If a company sells more units than manufactured in a period, then the closing stock will be compared to the opening stock, will be less. In such a situation, if a company is using LIFO, which is last in and first out method, some older units are assumed to be have been sold. This is called LIFO liquidation. In the event of poor purchases of or production, managers dip into lower older cost of inventory. Proceeding further to the next point would be extending useful life of assets. As we all know that every asset has a useful life until unless when it can be used. Firms can extend the useful life of these assets beyond their term. This helps in the reduction of depreciation costs and hence increased operating income. The next point in our red flags would be, and the last point is aggressive pension assumptions. Unjustified pension assumptions that reduce pension expenses and thereby liabilities and should be examined further. We proceed further towards what is called as a fraud triangle. So fraud triangle is an independent topic from the red flags in accounting. Auditors check for one or more items of the fraud triangle to check the veracity of financial statements. The presence of weak internal control gives the firm the opportunity to commit fraud. The motive of commit fraud may be because of pressure or incentives. Incentives to commit fraud are threats to the firm's stability because of changed economic conditions or industry scenarios. Poor internal controls, unstable market conditions coupled with poor organization structure and order, poor monitoring, and the nature of industry enables fraud. So we have seen till now what is a fraud triangle and the red flags in accounting. In this unit, or the unit 5, we will be proceeding further to see how an accounting fraud can be prevented. So there are three basic points under prevention of accounting frauds which we can look at. The first one is background checks. Know your accounting team. Hiring employees who will have access to sensitive information should include a background check. As we see in various companies that we are employed under, each company does a very keen background check on their employees to prevent any mishap or to judge the credibility of the employee. The second one which we can focus is internal audits. To maintain the integrity of accounting records, a periodic review needs to happen. This is a time where the department goes through the general ledger in search of any errors, makes adjustments, and detailed notes on of the adjustments. Internal audits are very important to see that the organization's department are functioning in a great stream. The next one and the last one under prevention would be peer review. We leverage peer reviews for complex accounting procedures. Peer reviews are a check off by a superior person on the team, preferably the CEO or upper management. It adds another step, but it makes certain that financials are accurate. So proceeding further, we can see there is a concept of whistleblowing. We will see in brief what is whistleblowing. Whistleblowing is one of the most effective ways to detect and prevent corruption and other malpractice. The Whistleblower Protection Act (WPA) has established to ensure that employees who engage in protected disclosure are free from fear or reprisal of their disclosures. This concept of whistleblowing is very effective and it helps to bring out the frauds or the malpractices that are committed in an industry or a company. And such whistleblowers are protected against their rights in the company. So, by this topic, whistleblowing, I come to an end of Unit 5, and these will be the topics that we'll be going forward. Thank you so much.